Hello everyone, welcome back to another video. This video is the second part to the volume profile series that we have started. So for people who have not watched the volume profile part 1, you can go ahead and watch that. And what we've discussed in the part 1 or the volume 1 of this series is what is a low volume node, what is a high volume node, what is a POC, and how we can utilize these three simple concepts into our daily trading scenarios, and how we can benefit from them, understanding the context of that these particular three concepts and using them into taking better decisions. Now today what we're going to discuss is the profile shapes. Okay, so there is one way of looking at it in which we define a session, or we say a day type, for example, let's say a balanced day type and so on, or we can simply name it by the profile shape. So we will discuss four major shapes or profile shapes or day types, session types that primarily occur on volume profile. Even on market profile, again, we will discuss market profile in a separate series. So this is particularly only about volume profile, and how these profile shapes can, again, in a similar manner, help us understand the markets better and help us understanding the context and taking better decisions. So before we start, I have on my right side the Bank Nifty chart, which is the only chart we're going to discuss today. We're not going to go deep into the options chart, the corresponding options chart. So we'll just expand this now. First thing, a lot of you guys had questions about how I have set these volume bars on the bottom on the horizontal profile or the horizontal axis over here. So we'll start with that. I'll just take a few seconds and then we'll move on to the profile types. So just for your, you can go over here, and when you set settings, you will come to this particular page. You can also go to this the settings from over here, that is the time histogram over here. So there are two ways to go over here. So we've just done a right click and done this. Now what I've done is, the first thing that I do is I select the max value calculation as chart session, and I select this as percent and not absolute. Then we go down and we see the various percentages that I have on, that is 15, 25, 50, 70 and 90, and then I select the colors. So that is how I get these colors depending on the chart session. Now if you wanted as a wholesome, you can select full history and you will see what happens here. You can select daily, you will again say what happens here, and so on. So what I do is I select chart session and I see for a particular session the volume that is transacted within a profile, or within a day rather. Okay, so with that done, now let's get into the profile shapes. Okay, so just a recap, what this magenta line is the POC, the point of control, which we've discussed in the last session. What the blue line is the secondary POC, that is the volume that is transacted the most after this place. Okay, so that is what this magenta and blue lines do. What it also indicates is the profile type. For example, a balanced profile will have them very close. A double distribution or multiple distribution profile will have them a little separated, and so on. So let's get into the profile shapes. Okay, now profile shapes not only help us in defining a day type or taking decisions on a particular day, it becomes much more powerful when it is used in context the next day. So what do I mean by that? For example, this profile will become, or the information that we get from this profile becomes much more significant and important the next day. So how does that happen? We'll just discuss. First we'll discuss the profile types. Now the most common is the profile known as the balanced profile. So we'll just go ahead and discuss the profile types, and then we'll go into the charts and discuss what happened in the Bank Nifty futures for the past few sessions, and how we can understand these profile types going further, and understanding it for the future sessions, and also decoding what has happened in the past sessions. So this is a balanced profile. What will generally happen is that the POC will be right here, and the volume that would have transacted would be like this. So this is what we call a balanced profile. The range of the day would be average, or below average, or something like that, or just above average. So that is what we expect on a day like this. It again depends on the volatility. For days like what we're having today, the volatility or the range will be a little more. So this balance profile can be, let's say, 300 points or so, or sometimes a little bit more or a little bit less. So that doesn't matter, but the essence is that the profile will look something like this. When I see a profile like this, what can I expect? What I would expect more often than not is whenever the market goes up in whichever manner, it will try and come back to the POC over here, and whenever the market goes down, it will try and come back to the POC over here. So what I would prefer is fade trades, that is whenever the market comes over here, I am looking for a short to the POC or any other interesting level here depending on my time frame. For example, a 5-minute time frame, I would look for somewhere close to the POC. If I'm scalping, I'll look for let's say 30 points or so, and so on. Okay, now the other interesting part that happens on a balance profile is, I will just change the color, is that the VWAP which starts from here will be something like this. Okay, so this is the other thing that you will notice on a balance profile. So that is, it will keep wavering around here. So this is an indication that whenever you are expecting the market to break down from here, or you're taking an aggressive trade going short here, is not going to happen. What it will rather do is go down, suck the liquidity and the stops here, and come back inside. So you can either trade this whenever the market comes inside, or the other way is, I have done a video on this, whenever you see a huge surge in the delta, that is the sell delta will be really high on your delta profile, and the market doesn't even close below that. If you see on a footprint chart, you will see the volume really high on a bar, 5-minute bar over here, and the huge delta accumulation over here on a delta profile, and the market goes up, comes here and takes a support at this delta profile and moves up. So this is where I would like to take a trade whenever this is happening. Okay, so this is very common, and trades like this which I just explained are common on a balance profile. Now let's move forward and discuss the second day type. We'll not to worry, we'll go further. If we do not find time looking at trade setups in this particular video, we'll certainly discuss in the coming videos of this series. Okay, the next profile that comes is is of interest to us is the second type, is called multiple distributions, double distribution, triple distribution. We'll again term it or define it as one type, that is multiple distribution. So what can happen on days like this is that the profile will look something like this. Okay, if it is a double distribution, it will look something like this. Okay, now this having this can be called B or whatever. Now what is the interesting part is, how do we trade this? Okay, now this can happen in one or two ways. Now again, we will go and discuss the concept or rather the context in a little while. Now whenever this type of profile happens, it can happen on based on a context, that is a bearish context or a bullish context. Now how can this happen? Let's say the market opened, and let's say the market opened here. Okay, it moved up here like this, hovered around here for about let's say 1 or 2 hours, and then suddenly decided to go down, and then did something like this. Okay, the other way this can happen is, I will just play out the scenarios. The market opened right here, it went up here, people thought it will go up, and came down here and did this. Okay, now let's consider one more scenario, or a better add some context to it. Let's say the scenario is that we've been having a trending market on the upside, and let's say this is the sixth day like this. Now what you're expecting is that the market is going up, so you expect that the market opens here, it goes up, and it falls here. So this is on a uptrending context or a bullish context. This has been happening, and let's say this is the 5th or 6th day where this is happening. Now the odds when you see a profile balancing here in the first 1 or 2 hours becomes really high that there is going to be a liquidation break, and this goes down. Okay, now when this happens, let's say there was a previous day, since the tone is bullish, we can see a high volume node, a bullish high volume node of a previous day over here. So what people are expecting is that it will hold here, but what it does is it doesn't hold and goes seriously fast down. Okay, now suddenly the context people start thinking is bearish, but what will happen is this is a liquidation break and it stops here. Okay, so what you can do is, sometimes what I prefer to do is, just when I see this consolidating here, you can try and take a bullish trade back to this POC which was there, or the, let me just clear this and get another this thing. Or what I will, if it is happening on a bullish context, what I will try and aim for is, whenever I see this consolidating here, a trade up to this single print zone, or the thin or the low volume node zone that separates the two profiles. This is on a bullish context. The same thing or vice versa can happen on a bearish context. So why am I saying this? How can we use this double distribution is how we should be playing this. Now the other part is this is on the same day when you're trading on the same day. Let's assume, okay, now on distributions like this, if it is a bullish context, you will more often than not see a test of this low volume node the same day, and if not, we'll come to the next part, that is the next day. Let's assume that the market opens here, okay, and we, as I discussed, there is a bullish context. The market just takes a liquidity sweep and comes back inside. So more often than not, you're going to see a pullback to this zone, that is the low volume node over here, and a fill of this low volume node. So what I mean by that is the profile that will form on this day is a balanced profile, something like this. Okay, so we'll just clear this out and see what happens. So again, I will not be able to play out all the scenarios that will happen. I am just trying to play out as many scenarios, and we'll again go to the recent history that has been happening so that we can discuss as many scenarios as we can. Okay, so you will have to again go into and spend some time on the charts, not going back. I rather prefer people going forward. So going forward from now on, you can keep seeing what is happening and keep anticipating and see if it actually happens or not. Okay, so what I will expect is in a bullish context is a fill of this low volume node and a profile like this forming. So this again, for people who think this is bearish, it is giving me a signal that we were not able to even take out the lows of the previous day on a double distribution. So, and this has happened. So this can keep happening for 3-4 days before the market decides and profile like this, and then maybe a breakout remains to be seen. So what I'm trying to say is this is very common, and you can play out these zones and these profiles accordingly after that. Okay, because the market has now decided after a good bullish tone to balance for some time. So this is quite common that happens, and then you can play out whenever there is a breakout. You can play out the upside, and if there is a failed breakout or a failed auction that we call, the market tries to go up and forms another B type profile over here and closes here. So what you do on a B type profile over here is you target the other end, because the market has tried to go up and failed and will move to the other end. This again doesn't mean that the context has changed to bearish. It means for the moment the market has decided to stay in this range. Okay, now this is a multiple distribution day. Another type of multiple distribution is you will have triple distributions like this, and a similar play can happen. We'll discuss if we can find something like this over here. So we'll not waste more time on the multiple distribution. We'll play and see if we can find them over here, and in the upcoming sessions if we can find this and play them accordingly. Again, the way to play it is again either on the same day when we break it something like this, and we go up and go to the low volume node. We short the low volume node whenever it moves up, and we're expecting a move down to this area. That is all. If it breaks, then we again keep playing these nodes. So what I'm trying to say is, in a sense, that whenever the market is moving down, is in a bearish context, let's say, so these are the places which are of importance to us. For example, when the market breaks down, it is coming up, we try and take a short over here. The market moves down, and if it doesn't hold this and moves down, so we and it goes down, whenever the market comes here, we have again created a position, a short position over here, because we're expecting this low volume node to act as a resistance, and then so on. So our first bullish trade becomes whenever this is breached and we enter this zone. So this particular distribution will have a high volume node here. So if the market doesn't stop here, the first stop or the pullback will happen somewhere here. Okay, and since it has entered this profile or this distribution, what we can expect is something like this to happen, and a hold of this distribution. This again brings us to the point that at present the market is not that bearish. It has decided to stay within this distribution. Okay, now let's come to the other two parts. I will discuss the other two profiles in one together rather, which is called the P profile and the B profile. Okay, now a lot of times there is a popular belief that when this happens, it indicates short covering, and when this happens, it indicates long distribution. Yes, it does, but only in some instances. Again, what has happened previously is of more importance than what is happening here. Okay, now let's understand that let's, for example, assume that there was a bearish tone to the market. It was going down, and then this profile happened. This indicates short covering, of course, because there was a bearish tone to the market, and then this happened. Now when a P-shaped profile happens, the first thing you want to see is if it is a short covering. By short covering, I mean no new money has come in or no new buying has come in. It is that the people were too short, and something like this has happened, sudden break to the upside, and the market has halted or started balancing after its move to the upside. Now if no new money has come in, okay, this low of the balance area, that is this one, should not break. Should break, sorry. So if no new money has come in, what you should see is that when this has happened, when the market is trying to play out, it should not go, it should not hold this zone, and it should break, and then you target the low of this P-shaped profile. That is that considering that this P shape was short covering. What happens in a short covering is, I will delete and get it back. So the scenario remains the same. What happens is the market gets too short, and people when the market starts moving above, let's say above this, a lot of guys start covering their positions. The market goes up here and starts balancing. Now a short covering in a bearish environment makes the market weaker. So what has essentially happened is even some weak buyers have stepped in, and they have thought that the market will now start trending upwards. They also enter inside. So all the buyers that were there are now inside this zone, okay, thinking that the market has changed or reversed and the market will go up. If the market breaks this zone, all these guys who have stepped in this zone trying to take the market up are weak players, and they will throw in their towels as soon as the market falls below this, or if it falls below this, we can expect a good fall again. So that is why as soon as this zone breaks, we try and enter a short. If it doesn't and holds and liquidity zone, and it stays like this for 1 or 2 days, you have to reconsider, and a break above this zone will cause further more short covering, and it is an indication that new money has started to come in to take the market towards the upside. So the P-shaped is not an indication of short covering in that case, okay, if the market moves above this. Similarly, the same concept you can apply for a B-shaped profile. If on a bullish up tone something like this happens, it is a liquidation break that we call. That is, too many longs had entered the market, and as soon as the market fell below this point, they started liquidating their positions, and the market held on. Similarly, if the market starts moving above this, you again initiate a long targeting this high and a further break up or break out of this zone if it happens. On the other hand, if the market stays within this zone or breaks down of this zone, this is a first indication that maybe, just maybe, we can see a sharper or a lower or a pullback to a lower region, let's say a POC of previous few days, or something like that, which we'll see in when we are discussing 3-4 profiles together. So that can also happen. So you have to understand all this when you're entering. Now these B-shaped profiles can not only happen on a bearish or bullish trend, it can happen the other way around also. For example, if you're going down and instead of seeing a P-shaped profile, we see a B-shaped profile, okay. So what does it indicate over here? It indicates that there is a sort of pause or a balancing taking place. So what can happen here is, when you see a B-shaped profile, when this breaks, you can see a good short covering along with some buying coming in, and then you can target the POCs of the previous days. Again, we'll discuss it when we see multiple profiles together. So this can also happen. So you seeing a B-shaped profile over here, it doesn't indicate long liquidation. It simply indicates that the tone was really bearish, and a lot of people have got too short at some point, and the volume POC or whatever the POC is holding for some time. And when you see something like this, we can target the previous high volume nodes of some areas from where we saw a sharp breakdown, okay. Again, we'll discuss this when we're looking at multiple profiles. The next thing that comes is when you are seeing I'm sorry for that, let's get the marker tool. When you're seeing up moves like this, okay, and you see a P-shaped profile. Similarly, like we discussed in the B-shaped profile, if we fall below this zone, we can again target the profile, the high volume nodes or the POCs of the profiles below, and that is where we want to enter. The other thing that comes into play is the low value area and the high value area. That is also very significant. We'll discuss in some time. So for example, it tests the high volume area and breaks. The next target becomes for us the POC of the previous session, and the target after that is the low volume area of that particular session, the low value area, I'm sorry. So for example, if you're seeing a session like this, so this is the value area high, this is the value area low, and we, for example, over here we check the low value area low over here and fall down, and we've not been able to take out this zone. So this is what I'm talking about. The value area high and low also come into play. We'll just look at when we're looking at the sessions. So now having discussed the various profile types, let's get into what has been happening in Bank Nifty. We'll I think we don't have much time, but we'll discuss a few 3 4 5 6 sessions that have happened and how we can play them going into the future. Okay, so the first thing that I would like to do is I will take out the candles so that we just see this, okay, the profiles, so that we get a better understanding. And the next one more thing that I want to do is we go here, go to the settings, and so that you can see it clearly, let's make it white. Okay, so now you can see everything clearly. Now let's start with the zone. This is the zone that if you remember, I've done a video on this and we've drawn this. This is a low volume node. Again, let's start with the profile types. Okay, now if you see, this is a multiple distribution. What has happened here is you see the bullish tone that has happened, and we just discussed. And more, I'm not switching on the candlesticks, but based on just the volume profile, I can very well understand that maybe that the market has opened here, gone up like a scenario that we discussed, and come down to an area. If you see, this is the previous distribution, is come down to that place and held on over there. So this is a scenario that we just discussed while we were talking, and this has happened. So when it comes down here and we see a hold of some sorts, what you can do on this day is target a long till this place. And I think on this particular day we've done a live video, and something like this is a trade what we planned, and this is how you play it. Now why have I drawn this zone? Because this zone becomes important. This is a multiple distribution, so for the market to have been bullish, this is the zone that should have broken. And when, if it would have broken, I would have targeted this high like we just discussed a few minutes back. What happens is the next day again a balance profile happens, and it happens on this, I mean, overlapping lower. So this is an indication that not that the market turned bearish over here, but this is an indication that taking a long or a positional long is not that advisable at this point in time, because we've had an upward momentum for some time. We can take a pullback. If you see, just let me delete, you have to consider all context. So bullish trade happens only after this red zone. It could what I was expecting at the time, a pullback could have happened till this zone. Why? Because this is an overlapping area, two profiles side by side, and this is a consolidation zone after which it broke out. So I was expecting a pullback and a hold till this pullback, which again we'll see did not happen. But at this point, this was, if you were considering a short, this could have been a very good area to consider. Now the next day again, if we see, the market does open, again attempts to go into this distribution on top, but it doesn't happen, and it breaks down and forms a distribution, something. These are three distributions that it formed. Okay, now again, this is common when a bullish environment is persisting. What we should have expected, or if we wanted to take a long trade here, is first long trade like we just discussed. If the market had opened here, the first long trade should have been here, targeting this high. Okay, this high volume node, or a low volume node rather, this division between the two distributions, and I think it did come over here, and this is what we should have targeted. Okay, I have not switched on the candlesticks. I am just explaining this based on profiles. You can go ahead and try this, and it is really powerful. Okay, now if the market had to continue further up, this is a balanced profile. These are the distributions that we consider. The next thing that should have happened is the market should have gone above here, and we should have let me delete all this. We should have targeted this zone, red zone. If the market would have gone above this distribution over here, we should have targeted, if it would have gone breached this high, we would have targeted this zone. What does the market do next? Okay, I'm sorry for that. What the market does next is opens here, and when you see a breach, this is an indication of a trend day. Okay, so this is, if you've seen this, something like this, an overlapping profile, and immediately as the market opens and you see something like this, very low volume being transacted, and the market in the first half an hour breaks this low of a two volume distribution. If you see, this is one distribution, this is one distribution, and you see a breakdown of this zone. This is an aggression. I mean, you can initiate an aggressive short because these two distributions have broken down, and you can see a move. This was a zone that we could have targeted, and the next zone is this volume high profile, I mean high volume node, or the POC over here. Why? This is a scenario that we just considered. This is a POC that we should have targeted, and it went down. When you're seeing something like this, there is no point in going long, because now the context is simply bearish. In a bullish tone or a bullish environment, I am seeing the profile is telling me exactly something else. It is not bullish, because this shouldn't have broken. We should have seen a break. Even if the market opened, let's say, gap down over here, what we should have seen is a consolidation in the ABC or the first 2 hours, and then break up and a multiple distribution again, and a test of this zone if the context was bullish. What we saw on the other hand is, as soon as the market opened within the first hour, it broke down of these balance zones. So what we target is the high volume nodes or the POCs of the previous sessions. Let's go further and see what happens. Okay, it breaks further, and now we see the value area. Don't worry guys, we'll discuss the value area and how to trade that in the upcoming sessions. This session was particularly about the profile shapes. That is why we're just discussing the profile shapes as of now. So we see a profile forming like this, and this is a B-shaped profile. Okay, now would you consider it a long liquidation after what has happened? Like a lot of us, like we have discussed, it is a long liquidation, yes, but I wouldn't try going long unless now the context is not completely bullish. We have come and entered the zone from which we broke out. We shouldn't have breached this zone. If we have breached this zone, the odds are really high we are going to test this zone. Okay, if you go back, I will just delete. If you go back and we see the breakout, okay, I think which is this one. Okay, so if you see the breakout, this was the consolidation, and we saw a breakout from there. When the market has started, let me draw a triangle over here. So when the market has started and come back in this zone, I can expect at least a touch of rather these high volume nodes, which has not taken place on this day. So I wouldn't go long unless let me delete this and get back to the charts. I'm sorry. Okay, now unless I have seen a touch of the other side, that is these high volume nodes. Again, something interesting happens. Okay, after this day, we balance and we form a value lower. If there was any sort of bullish context, what I should have seen is a value or balance something like this. It forms lower, and what is interesting on this day is that the tone has now shifted bearish, and we can expect a test of this and the volume node here even, which has not happened as yet. So we can expect a test of this before we go forward. Again, it remains to be seen. You see this point 47,433. We've just barely tested it. I mean, we can consider it a test. We'll see what happens next. We'll just discuss in a few moments. So what happens here is, I do not see even I mean a breach of this zone. So the first step towards a bullish tone is a a balance zone here. Okay, that is the first step, and then we move forward. This has not happened, and what I rather see is that this low volume starts happening and it breaches the POC, and you see the low volume node that has happened here. This is a very good trade targeting this, and when this breaches, again the targets become lower. Okay, so now let's come to the scenario. Let's come to the present scenario. Let me get this here and then expand. Okay, so the present scenario is, if you look at the profiles, this is a small profile, this is a big distribution, and there is another distribution over here. Now when the latest day, that is Friday, that was playing out, wherever the market opened, I don't know, but let's assume that the market opened here. So this is considering the previous day, not the entire scenario. This is considering that the previous day I have opened right in the dead center. Let's assume this happened. So what I'm expecting is the first thing, if I have to go long or turn my view bullish for the moment, I want to see this low volume node breach. So when this happens, of course, the first time I'm expecting a short or taking a short to this high volume node over here. This this high volume node could have acted as a resistance, but the moment it breaks, I am targeting this and this zone. Why? Because what I'm expecting is when this has happened, I'm expecting it to this day, when it is a big day, I'm expecting it to balance more often than not within this zone. What happens rather is it breaks even this zone and forms, if you look at it, these two zones over here, they are balanced in nature, but this is what has happened. Now if I have to, let's say for Monday, consider a bullish environment, by that I mean with respect to this day. If I have to take a long trade or an intraday trade for, let's say, 80-100 points, the first thing I want to see is a breach of this zone and then target this zone. Okay, somewhere here, this is the first target and the second is this target. If by chance the market opens here, let's assume, and moves up here and I see a rejection on footprint that we've been talking about, an absorption of sort, I target this zone. Now let's consider another scenario. If the market opens, let's say, even below this, and in the initial few 15-20 minutes it doesn't pop up inside, if it does, we target this zone. If it doesn't, and if it fails, and we see it on the footprint, it is failing, it moves up to this point, which is a high probability, and starts moving down, your target becomes even a break of this low, and it will become somewhere here 442 and zones below that. So this is how you play out the profiles. Now let us again switch on the candlesticks and see what has been happening. So now you can see very clearly these profiles, like we just discussed what happened. It opened somewhere here. We thought it was opening here. It moved up to the low volume node, failed there, and has moved down. So over here it is even more clear. So if we have to consider a bearish tone, this is the zone that I have to consider before I take a long trade to the upside. Okay, the other way I take a long trade is even if the tone is bullish, bearish, is when, if let's suppose, like I just discussed, the market opens somewhere here, okay, and it does, and immediately in first 15 minutes it does this and starts moving up. This is my first target and this is my second target. Only in a scenario like this do I target a bullish trade to this. Even though the context is bearish, I can see a lot of traders getting trapped here, and that is why I'm targeting only this zone. Okay, the first is this POC and then this zone. And similarly, a scenario, if we open, let's say here, okay, the market does this, I again target this, again a scenario for a bullish trade to this zone. Okay, the other scenario, again, I cannot discuss all of them, but we'll try and cover as many as possible. Let's say the market opens here, we try and do something like this, and we move down. What we do is we target this zone. First is the POC and target this zone, and if we break this up, of course we can target even lower areas. So this is how you play profiles, and you mix it with again footprint. If you like, for people who are new, you can simply trade these volume profiles and look at these charts and then get a better understanding. For example, how do you what is the rejection you're looking for? Let's say when the market opens here, for people who do not understand footprint, that when the market opens here, goes down, just breaches it and comes back. So if you see a bar like this, that is your indication with high volume. You look at the volume over here and the market not able to breach this zone, and it fails and closes something like this on a high volume. On the next bar, you can maybe initiate a long to the other side because you have the context of volume profile in your favor. So hopefully I was able to make you understand something new today. We will discuss the further nuances of volume profile in the upcoming sessions of this series. Until next time, guys, thank you. Bye bye.